Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've produced over 650 videos with more than 300,000 watch hours as of December 2024. Whether you're new to investing or a seasoned pro, my goal is to make complex financial topics easy to understand and relevant to you. Today's topic is no different. We're diving into Semcorp Industries and whether it's worth buying their stock at $5.40. Semcorp Industries has been creating buzz in Singapore's energy sector lately, and for good reason. The company is undergoing a massive transformation, shifting from conventional energy to renewable energy. Why does this matter? Well, the global push for sustainability isn't just a passing trend, it's becoming a necessity. Climate change is a pressing issue worldwide, and governments are stepping up with stricter regulations on carbon emissions and incentives for green energy projects. For Singapore, this aligns perfectly with our Green Plan 2030, which aims to have emissions by mid-century. Semcorp's pivot to renewables positions it as a key player in this movement. Let's break this down further. Semcorp used to be known primarily for its conventional energy assets like gas and coal power plants. But over the past few years, it has aggressively expanded its renewable energy portfolio. Today, they boast an impressive 10 gigawatts of renewable capacity across solar, wind, and other green technologies. To put that into perspective, that's enough energy to power millions of homes globally. This shift not only aligns with environmental goals, but also makes business sense. Renewables are becoming more profitable than traditional energy sources. Speaking of profitability, let's look at some numbers. Semcorp has a market capitalization of SGD 9.65 billion and trades at SGD 5.40 per share as of February 2025. Analysts are projecting a price target of SGD 6.68 for the stock, which represents an upside potential of about 24%. That's not bad if you're looking for growth opportunities in the green energy sector. But here's what really stands out. Renewables now contribute an impressive 73% EBITDA margin compared to just 20% from conventional energy operations. This shows that their green investments are not just good for the planet, but also for their bottom line. Now let's make this real with an example you might have heard about. The Tenge Floating Solar Farm right here in Singapore. This project is one of the largest floating solar farms in the world and spans an area equivalent to 45 football fields. Imagine that. Instead of using up valuable land space, Semcorp built solar panels on water reservoirs, a brilliant solution in land-scarce Singapore. The farm generates enough electricity to power thousands of homes while offsetting 32 kilotons of carbon emissions annually. That's like taking thousands of cars off the road every year. It's projects like these that show Semcorp is not just talking about sustainability, they're delivering results. But before we get too excited, let's take a step back and consider some risks and challenges. No investment is perfect, and Semcorp is no exception. One major concern is their high debt levels. Their debt-to-equity ratio currently stands at 1.57, which means they rely heavily on borrowing to fund their ambitious projects. While this isn't unusual for companies in capital-intensive industries like energy, it does add financial risk that investors need to be aware of. Another factor to consider is competition and regulatory uncertainty in the renewable energy sector. While demand for green energy is growing rapidly, so is the number of players entering the market. From startups to established giants like Keppel Corporation or even international firms expanding into Asia, competition is heating up fast. On top of that, government policies can change quickly. What's incentivized today could face stricter regulations tomorrow. So where does all this leave us? Should you buy Semcorp stock at $5.40? Here are my thoughts. First off, Semcorp's pivot to renewables aligns well with global trends and Singapore's sustainability goals. It's a long-term growth story that looks promising if you're willing to hold on to your investment for years rather than months. Second, their track record with projects like the Tenge Floating Solar Farm proves they can execute large-scale initiatives successfully. However, you need to balance that potential against some risks, namely their high debt levels and the competitive landscape in renewables. If you're considering investing in Semcorp, think about your own risk tolerance and investment horizon first. Are you looking for short-term gains or long-term growth? And how comfortable are you with the risks involved? Remember that no stock is guaranteed to go up. Always do your own research or consult a financial advisor before making any decisions. Before we wrap up today's video, let me ask you this. How do you see Singapore's role in the global shift towards sustainability? Do you think companies like Sembcorp can lead the charge? Let me know your thoughts in the comments below. I'd love to hear from you. That's all for today. If you found this video helpful, give it a thumbs up and share it with your friends who might be interested in green investments too. Don't forget to subscribe so you never miss out on future content like this. Thanks for watching. I'll see you next time. Before we wrap up today's video, let me ask you